Awesome. Okay. All right. We will get started. Hello, everybody. I'm sure we'll still have some people trickling in, but want to be prompt as I know your time is important. So thanks so much for being here. This evening is our we do a monthly event, whether that's online or in person. This one is going to be a little bit more general. We tend to focus a lot on the investment space, which is obviously near and dear to our hearts, but there's a lot of questions as well for buyers and sellers and investors out there. So we're going to touch on each of those components a little bit tonight at today's event. And this will be recorded. We will upload it as always to our YouTube channel. So if you have to pop out or you want to share it, no problem at all. But we will get started. So my name is Natasha Phipps, and we do these events every month to try to bring you some value, to try to keep you updated as to what's going on in the marketplace. And just before we start, I'll tell you a little bit about us and the types of services that we offer. So we are based in Calgary, Alberta. I know there's some people watching from across the country here this evening, but we are located in Calgary, Alberta, and we help buyers, sellers, and investors with all of their real estate needs here in Calgary in the residential and commercial space. So we do work in both segments of the market, and we are highly specialized in the investment space. But we even like to take that specialization for helping our, regular homeowners and sellers, because at the end of the day, these assets are big investments. And so that experience on the investment side rings just as true, whether it's your primary residence or a income property for you. So that's something that we have as a niche and definitely what we specialize in that our clients love. We also offer property management services. Our property manager, Una Allen, I think will be tuning in a little bit later this evening. She's tied up with some family, but hopefully can pop in. And for property management, we do full leasing and ongoing property management services. So if you just need help with placing a tenant, to do the screening and the showings and the lease up and all of that stuff, we can help you with that. And then we also do ongoing property management as well, and take care of the maintenance and the walkthroughs and everything from start to finish so that your investment is taken care of and protected. So if you ever have interest in that, let us know. And then we are very proud trusted partners of several investment groups here in Canada. And I know there's several people here tonight that are part of these groups, but we are the Keyspire Trusted Real Estate Team for Calgary, the Real Estate Investment Network. And most recently, we joined the Savvy Investor Group as a trusted strategic partner with them as well, which we're very excited to be a part of their group. And we are also McGillivray Trusted. So we're in all the groups. We do a lot of events. You probably see our faces out there a lot. And we love that. We love being able to actually interact with people face to face. But this is a good second just as a touch point. So we love these events to be as interactive as possible. We're doing this for you guys. So if there's questions, please put them in the chat at the end as well. We can, stop the recording and have a dialogue as well if there's something you want to bring up, because if you're wondering about it, I'm sure there are other people as well. So with that, I'm going to turn it over to my partner, Andrea Tessier here. She's a managing partner of the team, and she's going to give us the Calgary market update and what we can kind of expect if you're out there in the market right now.
Thanks, Natasha. All right. Hi, everyone. Just as Natasha said, I've been working as managing partner of the team, and here's some of our contact information. We have a slide at the end as well. If you have any questions about the presentation or want to get in touch, then our contact information will be on there. But I wanted to start with a bit of an overview of 2023, and then we'll jump into what's currently going on and what the forecast is looking like for 2024. So at the end of 2023, it was a really great year in Calgary for the real estate market. Despite higher interest rates, a lot of other markets around Canada were seeing prices coming down and seeing some of the conditions change. The Calgary real estate market really remained resilient. And this was due to a number of things. The first one was that we had a robust labor market. So seeing more diversification in our economy, new job creation, and a lot of migration into our province. a lot of interprovincial migration as well as migration from out of country, which led to strong demand. And that migration was fueled by a couple of different factors. Affordability was one of them. You know, our market is still relatively affordable compared to a lot of the other Canadian large cities. Again, due to that robust labor market and strong job creation. And then as well as lifestyle, because we are so close to the Rocky Mountains, a lot of people wanting to share in that lifestyle also. So that led to a lot of strong demand. Inventory simply was not able to keep up in 2023. So we saw persistently tight conditions kind of all throughout the year, with consistent benchmark prices increasing throughout the year, and it really kept us within a strong seller's market. So the largest gains that we saw were in the lower priced homes, which was really interesting to see. Our condo market finally recovered from some of the highs that we saw, you know, many years ago. And there's a lot of people holding on to condos because they had seen a little bit of devaluation, but the condo and those lowest price homes for townhomes, apartments, that sort of thing really saw the biggest gain. And our annual average benchmark price growth was about 6% in 2023. So that was really strong. So then looking at our most recent stats. So these are the stats that were released from the Calgary Real Estate Board for January of this year. We did see a significant rise in sales compared to January of last year, which was really great. And that really was due to increase also in new listings. So there were new listings that hit the market, but also a lot of sales. So the challenge with that is that it really did not help inventory. While new listings are coming on, they're selling very quickly. There is some pent-up demand in the market. So it really kept our inventory quite low and our months of supply quite low. So months of supply, that number is looking at, you know, if we had this consistent inventory, how quickly would it take for everything to sell? So we're within a strong seller's market. 1.3 is quite low for months of supply. Anything kind of 3 months and under is definitely considered a seller's market. So our benchmark price continued to increase. It went up again year over year for January. So the benchmark price. Now that's benchmark number is an important one to consider. That's benchmark across all different property types. So kind of the average property type and style, that would be the benchmark price. So it was $572,300. So our prices have continued to increase. Supply is continuing to be low, and days on market is quite low as well. So the average days on market was 34 days. That came down. So go back the other way. There we go. So looking ahead into later 2024, you know, across Canada over the past year, we really have seen that higher interest rates and inflationary pressures have slowed consumer spending. However, Alberta is really expecting to outperform a lot of the other provinces due to the resilience of our energy sector. And I think a lot of out of province buyers or sellers, you know, sometimes they're a little bit hesitant of our market because we are very oil and gas driven. And while that is true, I think, you know, as I touched upon in the first couple of slides also, is while we do have that really strong energy sector, we've also been seeing sustained growth in other sectors, in the professional, scientific, and technical services, which is really exciting to see. So we have that strong resilience of the energy sector, but we're also seeing diversification. And that really has led to our strong labor market. And we're expecting to continue to see that in 2024, as well as continued migration into the province, which those two factors we're expecting to support strong sales. So continuing to see high demand, and it's just going to be a matter of, you know, is inventory going to be able to keep up with that demand? We're also expecting that likely later this year, lending rates are going to ease a little bit. So with that, though, we expect that kind of any buyers that have been sitting on the sidelines may start to re-enter the market, which is going to push that demand even more. Again, so it's going to come down to, are listings going to be able to keep up with that demand? Are there going to be enough new listings that come on? We are expecting the new listings to increase, and that there will be housing starts in new construction as well, which will bring some modest gains. But the bigger question will be if they'll be able to level things out. So with that high demand, we are really expecting a strong seller's market to persist coming into the spring, and for our conditions to stay within those low months of supply. So with that being said, we wanted to break it down a little bit. As Natasha said, of course, we are heavily investor focused, but we also support buyers, sellers of all types. And so we wanted to kind of break things down from each different perspective and what are some important tips, knowing kind of the forecast for what this year is supposed to look like. What are some important things to consider if you are looking to enter the market or purchase a property, or on the other side, if you're looking to sell. So in terms of buyer tips, one of the big ones really is getting pre-approved for financing, and make sure you're doing that before you even start looking for properties or shopping. Make sure that your mortgage broker or lender that you're working with has all of your up-to-date documents. So if you have a pre-approval that's several months old, checking in with that person and making sure that they have all of your up-to-date documents so that everything is kind of set to go before you even begin shopping. Once you have that pre-approval in place, it's also important to set a realistic budget that's not only your mortgage, but also looking at the other costs, monthly costs that you're going to see from owning a property. So your utilities, property taxes, in looking at the bigger picture there to ensure that your budget is realistic and you're not just looking at the highest pre-approval amount that you can get. The next one would be prioritizing your wants and needs. So as we mentioned, inventory is low, and that means that there's not always a lot of choice out there and things are selling quickly. So we want to prioritize what are the most important things to you, whether that's location or something specific about the property itself, and where maybe you're more willing to compromise. I think that's really important to consider when we're in these sellers market conditions. Where could there be a little bit of compromise, or what's something that you could potentially change? If it's cosmetic work in the property, but it's in your absolute ideal location, would you be okay with that? Maybe putting an offer on something and then having to do a little bit of work or renovations afterwards. So those are really important conversations to have before you start shopping and when you're starting to connect with your realtor. So the next one is build your team. Of course, that's not only your realtor, your mortgage broker and lender, but also other professionals, a lawyer, property inspector. If you're looking at a condo if you're looking at a condo, then a condo doc reviewer. And we can help with a lot of those referrals. We have a lot of great professionals that we have relationships with in the industry. So if you're not sure about some of those, we can definitely help with that. But we want to also start to build that team before you start looking, or while you're in the process of looking, so that when you do find the right property, you're prepared and you have those individuals behind you who can help to support you making an informed decision. As we mentioned, things are competitive. So with little inventory out there, we are continuing to see multiple offer situations, property selling very quickly, and often over asking price. So we do recommend that you're shopping a little bit below your budget so that you have some wiggle room to potentially offer above asking price if you are competing with others. Now, we'll always look at sold comparables within the market to help educate an offer for you. I think that's a really important thing. We don't want to be offering way over the offer price if that doesn't make sense for the property and where other properties have sold. But if you are competing with others, it is likely that you may need to have a little bit of that wiggle room in your budget. So we want to make sure you're not shopping at the very tip top where there isn't that flexibility. Now, within the market, we are seeing some scenarios where sellers are, excited about the market and maybe listing high, or maybe the property doesn't show the best inside. In some of those scenarios, then properties are still sitting for longer. And we may see price reductions, or there may be opportunities to negotiate. That still can happen. But I would say generally, if a property comes on the market and it's priced well to start, we look at comparables and say, yep, there's other properties that are very similar that have sold around this range. It shows well and it's new, then usually that's when it sells very quickly. So it doesn't make sense, to try and lowball on a property like that that's priced well, it shows well, it's new to the market. likely that's not going to be a successful strategy. If we are looking at properties where we want to get a little bit below asking price, it's the ones that have been sitting for a little while that maybe weren't priced right from the start, or that don't show the best in person. So then the next part would be considering components of your offer that will help to make you competitive if you are in a competing offer situation. And there are lots of different components that can make a difference for a seller. Of course, the first one is price. That's always a big factor. And that's why it's important that we're kind of shopping within your budget. You've looked at your realistic budget and what makes sense. The next one would be possession. So, we want to be mindful of what works for you in terms of possession. If you have flexibility, then that's great. If there's a certain possession date that you need because you're selling a property or you're renting a property currently and those timelines need to line up, then that's where we need to be a little bit mindful, because if you're competing with other offers, a seller is likely going to choose the offers that line up with their preferred possession date. The next one would be deposit. So I think this is something that's maybe not a lot of buyers or at least first-time home buyers are not aware of, but your deposit is something that's typically due within 2 to 3 days of putting in your offer and it being accepted. And that deposit is held in trust, usually by the listing brokerage, and it is refundable throughout your condition period. But it shows the seller that you're serious about your offer and that you are in a good financial position. So putting down a higher deposit can sometimes make the difference if you're competing with another offer. But it needs to be funds that you have readily available, because again, you do need to put it down usually within 2 to 3 business days. That's something to be mindful. It's not tied up in an investment that's going to take a few days to come out. It needs to be funds that are readily available. Next in your offer, of course, are conditions and terms. So we want to keep those timelines as tight as possible. From a buyer's perspective, we want to make sure that you have the time you need to complete your due diligence, make sure that you're prepared to move forward and that you want to move forward. From the seller's perspective, they want that timeline to be kept very tight on your conditions, because while you're working through your conditions, their property is pending. It may go through to a firm sale, but you could choose not to waive conditions and it could go back on the market. So they want that timeline to be as short as possible. And that's where it goes back to the first few points here, making sure that your pre-approval is in place in advance and you have all of your documents up to date with your lender or mortgage broker. It's often very difficult to get a pre-approval and the actual approval all within a condition period. So we want to make sure that you have everything prepared as much as possible before putting that offer in to keep things tight. As well, if you've prioritized your needs and you have that team of inspectors, lawyers, all of that, then it's easier to keep those timelines tight and for you also to make informed decisions. So those are kind of some of the different things that we can look at when you are planning to put in an offer, if you are going to be competing. And so important that we're prepared up front. And again, we're here as your team to help support you through that with those different referrals and with guidance and advice as well.
Hey, Andrea,
so now
we're move on.
Yeah.
Can I just add one? I think that was so good. And one thing this kind of brought to mind for me was a couple of things. Was also, when you're getting your pre-approval for financing, let your broker know if you are planning to buy something with a secondary suite, for example. Let them know if you are wanting to do any renovations. The more information you give the broker, the more accurate your pre-approval is. And really, you don't have an approval until you have a contract, a firm approval, right? So they're doing the best that they can with the information that you provide them. Or I've seen cases where, people okay, well, this is my budget for the city of Calgary, but then they want to go, 40 minutes east of the city now to buy an acreage. The lender is going to look at that as a lot more high risk. So they likely will want you to put more down, maybe not as favorable financing terms. So make sure you're communicating to your mortgage broker what you're actually buying and the intention, and if there's going to be condo fees or anything like that. And then in the competing offer thing as well, letters help a lot. A really common thing we're seeing is actually, I had a realtor call me today on a listing. He has had 2 deals fall apart. Both of them were kind of bully offers that were in a competing offer situation, and kind of just pushed everybody out of the way by a really high offer, but they didn't provide any support for, can they actually afford this? And if you come in even at a little lower price, but I, as the agent, see that you have a mortgage approval in hand, you've provided a personal letter to say, just to put a bit of a personal touch to it. Us as agents on the other side will definitely give that weight when we're communicating your offers to the owners of the property. So all those things definitely help.
Yeah. Yeah. And to add to that a little bit more, because I've had quite a few questions around this in the last little bit. So your pre-approval is, your lender looking at you, your financial situation, your job, but then the actual mortgage approval itself is going to be looking at the property also. So that's why, it's not usually possible to do those two things within a short period of time. We want to make sure, yes, you're set up financially, the lender has all the information about your job. Yeah, you're in a good position to be able to purchase a home, but then they are going to want to look at the property itself, like Natasha said. So if you're looking at certain property types, you want to let your lender or mortgage broker know that. But they'll also need that time. They may require an appraisal, or, if there's something going on with the property, that may be a consideration. So important to note those differences between the pre-approval before you're shopping and then the actual approval that's going to happen during that condition period. And with that, if you can ask your mortgage broker or lender to provide you with a letter that says you are pre-approved, that's also a really nice thing to include with an offer. And then checking in with them to say, hey, if we put in an offer, how much time do you actually need to get then that approval done? And usually that's where we're looking for the mortgage broker or lender's perspective. Okay, you're going to need, 5 business days or 7 business days. They can really help us on our side too, because we don't want to, put 3 days and then that's not going to be possible. But again, we want to keep that timeline tight. So having all those documents prepared will help with that. All right. So then flipping sides to sellers in this market. So again, it is a seller's market, of course. Things are selling competitively over asking price, which is really exciting. But the biggest piece of advice I think we can have for this is still that it's so important to price right from the beginning. So, again, as a realtor, as I mentioned, when we're looking at properties that clients want to offer at, we're always pulling comparables. We're seeing, okay, what have other properties in the area have sold for? So if you're priced too high, people are going to see that. It's so important to price right from the beginning. And the data really shows that properly pricing homes, they sell faster for more money and within the first few weeks of listing. So those first few weeks when a property hits the market, that's when the most eyes are getting on it. It's getting pushed out to all the third-party sites like realtor.ca. Most amount of people are seeing on the MLS. They're getting email notifications, new listing. So we want to make sure that it's priced right from the start. If it's priced high, then people are going to see that. They may look at the comparables or view the property and say, okay, it's priced a little high. May sit for a little while. And then it starts to build up some stigma as well. Okay, why has it been sitting for a little while now? Why isn't it selling? And often then that's where we're seeing, those properties that are on the market for a little while or where they're doing price reductions because it just wasn't priced right from the start. So I think that's so important. Pricing, no matter what type of market conditions, is really important. Mm-hmm. The next one is, I think it's still important to take a look at your property, plan ahead in advance of when you're looking to list, and, have your realtor team walk through and say, okay, what kind of improvements potentially could you make? What would make sense? And where are you going to get the most bang for your buck? Or, maybe that's not necessary to do because we are within that seller's market. Is it going to make a big difference to paint? Yes or no? And we can help to provide some guidance there as well. But in general, we still want your property to show the best that it can. And so staging can be a consideration. It may be as simple as, not necessarily putting new furniture in your property, but just tidying up, making sure that things look really crisp or organized in the property. And again, that's where we can come in and help to provide some guidance there. We want it to show the best as possible and be priced really fairly to start so that we're going to get the most amount of interest, the most amount of eyes on it, and then potentially the most amount of offers, which can lead to more money. So with that, I think it's also really important to discuss with your realtor strategy for reviewing offers. What we're seeing quite a bit of in this market is, properties are listed. Usually we like to list them kind of midweek on a Wednesday or Thursday in anticipation that the most amount of buyers are then going to be out on the weekend, because that's usually when the most amount of people are free. They're out viewing properties. And we want to give everyone a chance to get through to potentially allow the most amount of interest in offers. So I think that is an important thing to discuss with your realtor, is the strategy. Okay, what are you going to do? Are you going to hold an offer presentation? That is quite common in this market. So, a property is listed on Wednesday. Showings are permitted all from Wednesday to Sunday. And then on Sunday, we're going to look at offers. Now, from time to time, what we call bully offers may come in, where a buyer says, hey, I don't want you to wait till Sunday. We want you to look at this offer right now. But what I found is interesting with that is, like, unless the offer is very strong in terms of price, maybe very limited and tight conditions, or potentially even unconditional, oftentimes when we've been representing sellers, if we wait and hold off, then even if that offer expires, they do come back to the table for the offer presentation. Now, not always, some buyers may say, nope, okay, fine, that was my final offer. I gave you a deadline. I wanted you to look at it before the offer presentation. Now I'm not going to come back to the table. But I know as a seller, it can be emotional, and there's can be pressure to look at offers as well. But when there is a lot of interest, and usually we can judge that within the first day or two, are lots of showings getting booked? We're getting lots of calls? If yes, we know we're priced right, things are showing well, then that's a good indication. Okay, maybe we do set an offer presentation. And from the buyer side of that too, as well, I think that's something to consider is, often we are seeing those offer presentations set. And I mean, there are some bully offers that are coming in, but I think it does need to make sense to be a strong offer for a seller to want to accept that when there is a lot of interest in their property. So we, again, can help with that strategy to ensure they're getting the most amount of eyes on the listing, that it shows really well, it's priced well, to get you the best price possible. Yeah. Natasha, was there anything you wanted to add to that on the seller side?
I think one thing I just noted down was that we've had a lot of conversations with recently is if you can list, especially if you have a tenanted property, there's significant demand for housing, like people who want to buy and somewhere to live. And so if you have a vacant unit, if we're talking about a suited property or just any property, right now I do think you will get more for it if it's vacant. Investors are going to be a lot more tight on the numbers, of course, if they're buying something for a rental property, but a homeowner has a different perspective. So if your lease is coming up this year and you want to sell, like, ideally time that with that lease. And it will be worth your while, in my opinion. You will not have to disturb your tenants. You will likely, and then you can accommodate quicker closings or whatever the buyer might want. That'll get you a little bit more for the property. Is definitely something to consider out there in the market right now. And then if you are selling a property with tenants, I do see often where, like, oh, we just renewed and they didn't increase the rent. You're making a financial decision for the next person, right? So definitely, if you can raise your rent, if you haven't done a rental increase in the period of time that you're allowed to, and you can, but you think, well, I just want to renew it, so there's a lease in place, take some time and make sure that the numbers are actually market and fair for what's out there right now, because otherwise the next person is now stuck with that lease for X amount of time.
Yeah. Yeah, I think that's a great point. And it gives more options. And I think, from the investor side of things, of course, we never want to have a vacant property, but if we can list close to the end of a tenancy or right when the tenants are out there, I think often, it gives more options. You have a bigger buyer pool. It's also often easier because you're not having to deal with tenants. With tenants, we have to provide 24 hours notice for any appointments for viewings coming in. Sometimes, of course, it's disruptive to them. So they may not be the most cooperative, or it may not show the best. So having it vacant often makes it easier and possible to sell it quicker in the long run. Yeah.
The other thing I was going to mention,
All right.
which sort of we're going to talk about after, I guess, a little bit from the investment side, but and this kind of ties in with buyers and sellers right now, is you're seeing a lot of assignment opportunities come up. People who, bought pre-construction a year or two ago or however many years ago, and they are needing to close this year because they've got their letter of possession. And I know we have several that have come to us that actually can't close. And so I think we could see a buying opportunity in the next couple of years here, where there are situations where people bought these units, maybe didn't, spend as much time researching what they bought, or just didn't go the way they intended. And now they need to exit this opportunity because they can't close. Interest rates have come too high, and they didn't, maybe think about a plan B, unfortunately. And so we are seeing these things come through where there's people who are in a tough situation, where you could get a good price for these properties, and they just want to not lose their deposit. So that could come up from the buying side. If you have an assignment, that you want to sell, leave as many options on the table as you can for the next buyer. So not taking the rental guarantee, for example, that you agreed to 2 or 3 years ago. Let them know you don't want it, because very likely market rent is now higher than what you agree with the rent that they thought it was a few years ago. So just leaving as many options for the next person on the table is really what I think we're seeing out in the market, that's what people want. They want to be able to pivot and adapt. And really, that's what I love about real estate, is the options. So leave as many options for the next person as possible.
Yeah.
Yeah. Awesome.
Right.
Okay.
So I'll hand it over to you now.
Thank you. If you wouldn't mind, Andrea, if you have your phone, just to keep an eye on the Facebook land.
Yeah.
Great, and you have controls as well. So, okay, well, I'm going to kind of discuss the investment side of things. We talked a bit about buyers and sellers. Now we're going to talk about investors. I am an investor myself, first and foremost. So is Andrea. Andrea is actually a past client of mine. And her and her husband were investors before Andrea was a realtor. And so that's really my passion and love, and very involved in the investment space. 2 years ago, my partners and we also launched a real estate investment trust, or REIT, in Calgary. And so we're in the multifamily space, the residential space, the short-term rentals. We've done infills and development. So I have a lot of experience in a lot of different things. And the great thing about the Alberta market, and we're going to talk about that a bit here, is changing markets force you to change and adapt to do well. And that's something for long-term success, you have to be on board for, and you have to understand that that is absolutely going to happen, and things are going to change and things come and go. So we're going to talk about strategy and what I think investors should maybe be thinking about here as we move into this year. So we can go to that first slide there. Okay, so this isn't all that different than really what we saw in 2023, but there's a few things coming up this year that I think are good to keep an eye out. So I mentioned the one about the assignments as well. But first off, aligning your strategy with the location is always if someone asks me for one tip of real estate, this is it. And this is where I think the largest mistakes happen, when you hear people get stuck in a bad deal, or they either usually didn't align strategy with the right location, or they didn't find the right team to help them avoid some costly mistakes. So those two things combined. So in terms of strategy in location, you want to make sure what you're looking to do works. So we're going to talk specifically about Calgary. But if you're not familiar of the strategic decision with location and how to determine what type of economy we're in, I would suggest you start there in terms of the education. There's plenty of resources out there, but if you ever want some of my tips on that, let me know. But learning how to determine what are we in the economic cycle for your area, if we're talking about Calgary or any other area, and what types of strategies make sense in that type of market. So for example, if you're wanting to do a BRRRR, for example, you want to buy a property, renovate it, you want to, rent it out, then refinance. We don't want to do that in a market that is declining, right? Because that property, now you're at risk of not coming out where you want it to be at the very end. So that's just one example. Same thing with, short-term rentals or flips. There's good times for those types of properties and even good times of year. So I would suggest giving that some thought. And then I do think looking at passive versus active investing, most successful sort of individuals I have studied and their portfolios and what they have built, and we look at this as well for our own portfolio, is how can we combine the passive with the active? Passive investing typically isn't going to probably make you as high of returns as, actively doing something yourself, but you can only do so much at one time. And so if you're passively investing in something over here, while you're actively doing something over here, you have multiple kind of things going for you. So I would highly suggest looking at that. It's RSP season right now. There is so much out there in terms of opportunities that you can do with your registered funds, your RSPs, your TFSAs, and more. And that's something that I do think often carries investors through the more difficult times. So that diversification and having different options and different types of things, some that are more liquid and some that are not, really provides you security at the end of the day. So I don't think we should forget about that moving into this year. I know a lot of the other parts of the country are sitting in a very different position than we are, but that remains to be true regardless in terms of being diversified in all things, in all locations, and passive and active as well. The third one is finding the best person for the job. The reason I put this one in here is where Calgary's at right now. Particularly, I'm concerned about still, particularly out of province investors investing in Alberta and not finding the right people for the job. And just because Calgary's market's doing great does not mean everything is a great investment by any stretch of the imagination. And I think there's some predatory marketing going on out there that I'm not comfortable with. And we're starting to already see this kind of put people in a bad way. So find the best person for the job. If there's a project out there or something you want us to take a look at it, like, please send it over. Happy to give our thoughts on it, or find someone who is in this market or whatever market you're looking at that knows it. In terms of new construction out there, there's plenty of projects. For us, we only promote the ones that we're really excited about and that I feel confident about, our team feels confident about, that, in however many years' time, we will still feel like we did as much due diligence as we can right now. And that is something I'm concerned about. So finding the best person for the job. I'm an expert, for example, in Calgary, but I'm not an expert in Toronto. So I don't, expect that I would have the answers if I'm looking at Toronto. Number 4, I feel like there's plenty of investors in our world who have built a decent sized residential portfolio, and they maybe cannot get any more mortgages in the residential space, or they just want to grow and they're really excited to maybe, go full time into multifamily. And looking back on last year, I had dozens and dozens and dozens of meetings of people that were interested in this. But what I found pretty commonly is that the pieces are really hard to put together compared to residential. It's not as simple on the commercial side. So first and foremost, if you want to get into the multifamily space, absolutely get educated first. We, like I said, joined the Savvy Investor Group this year, and they offer really great education. And I do recommend that. Where I'm finding people are having issues is typically around, they're caught in this marketing with the CMHC opportunities out there. And it is misleading. I feel what you see out there in marketing. It's not nearly as simple as putting 5% down on a $5 million building and you get your mortgage and away you go. And that's kind of how it makes it sound. So getting educated first, finding the right team. Like I said, we do commercial. I have bought and invested in these types of investments myself. I have been through the program. I know what it's like. And so making sure you're dealing with people who have that experience. The MLI program, as itself is relatively new. It's only a couple years old, and it is constantly changing. They have the ability to change rules and policies and terms really at the snap of their fingers. And so it's really important the team is like really ear to the ground when it comes to those types of opportunities. But I do think for Calgary specifically, if you are interested in multifamily, there is opportunity in two different ways. Number one is there's plenty of assets out there that are underperforming their landlords who are tired. They've maybe, managed this building for decades, and they probably wanted to sell 5 years ago, but the market just wasn't there. And they have not, raised rents to where they should be. They are not performing where they should be. And I hear people say all the time, well, this doesn't cash flow. The numbers don't work. The numbers don't work. And the numbers will not work. They will not. But the opportunity is seeing what you can do with the property, not what it's doing right now. That is the big fundamental difference with those types of assets. And there's plenty of those types of opportunities out there where people just want to exit. They're done. They're tired. But you have to have a vision, and you have to understand that it's about what you can do with it, not what the numbers are today. And then the second place, I think we are going to see more and more opportunities in the multifamily. We even have a few of these in-house we're working on right now, which are new construction. So they are, 4 plexes with secondary suites, or 6 plexes or 8 plexes. And those are great because they're brand new, they're turnkey, they do qualify for the CMHC MLI Select program, or just MLI regular. You don't have to go the full MLI Select. And the city of Calgary is really on board for that. They're on board for more density. They're relaxing parking requirements. And from a development standpoint, if you're interested in developing, now is the time. Absolutely. Now is the time for Calgary. So that's all very exciting too. So if you don't want a project, but you want multifamily, there is opportunities out there like that now for Edmonton and Calgary. This isn't just unique to us here in Calgary. From the new construction side. And then, the last few here. So inventory is going to continue to be an issue. There's no way around that. So, if you're an investor, being as clear with us as possible what you're looking for helps so much. Check in, remind us what you're looking for. Even like there's so many people looking, and the more clear we have it, oh, if I see something or hear something, oh, that reminds me of, so and so I chatted with. So getting clear of what you're looking for helps us a great deal. And then talking about exiting is something else too. There's a lot of investors who, particularly in the condo world, Andrea mentioned how the condo market has seen that recovery, right? For years and years, the red X on the downtown condo market was just so kind of frustrating for so many investors. And so what we've seen a lot of our investors do is they're exiting those units now, putting that money to work in something that makes a little bit more sense with the strategy that they want to be executing. Maybe they have more control over the unit because they're going to a single family home now or something instead of a condo where they're highly restricted. So if you are invested in some condos here in Calgary, and you want to look at exiting, I do think now is a very good time as we get into the spring market. As these buyers Andrea was talking about that are going to get off the fence, affordability is still going to be an issue. So I would expect this year the condo market, the townhouse market, to continue to see some pretty significant activity, because just from affordability, new people entering the market, they're going to be able to afford less than what they could afford a couple of years ago. So that'll mean they're going to look at higher density options. So I would expect that. Also could be a buying opportunity there if you do have a lower budget. Now is also the time to buy in downtown Calgary. If you look at our events from a few years ago, I was like, do not buy, do not buy downtown. Now is the opposite, right? Because now that inventory is eaten up, we're seeing some upward graphs, which is really great for downtown. So it's also the time from that perspective, if you don't have the budget to get that, duplex or fourplex or whatever, but you still want to enter the market, that could make very good sense right now as well. Gary, what do you hear? I got a couple questions today. Okay, we got questions about Strathmore. So Andrew, I'm not sure what specifically you're talking about, but there's some new development stuff out there that has been pre-sold. Not so much in Strathmore, more like Chestermere area, that I'm watching. I'm a little bit leery about. But what I like about Strathmore and kind of a little bit further out like that, but not super far, someone could still easily work in Calgary. Your dollars are still going to go a decently far away. There is some economic development happening east of the city. So I would look at Strathmore. Now, the thing I always note on these smaller centers, though, is as soon as you start to see an economic shift, you're going to start to see kind of those areas might get hit a little bit harder. So I would look at it. If you have a long-term perspective, great. If you want to, own something for a couple of years, I wouldn't recommend it. But if you have a long-term outlook, there's very good tenants out there, very good people to rent from you. So I would absolutely look at it long-term. Yeah, great. And Gary, what are your thoughts on setting up partnerships specifically to address multifamily opportunities? Oh, Gary, I could do a whole 2-hour workshop on that. I mean, yeah, definitely. This is something that I'm actually looking at this year, providing some coaching around. I get asked about this a lot, how to set up partnerships and structure and all of that. That's a very technical question, but I have done many partnerships, many limited partnerships, joint ventures. So I can certainly, talk high level there, but definitely most people need to do that because not many of us have millions of dollars laying around our bank accounts to go buy a building on our own, right? So very common, but I would have a lot of follow-up questions to that, but absolutely. And maybe that's a good idea for an event, Gary, is talking about that if there is interest of how to do that kind of thing. Okay, yeah.
I've booked a session just on that.
Okay. Okay, great. And like I said, I'm actually this close to launching coaching. I'm not even calling it coaching. I'm calling it execution. This is going to be an execution type of support because not everything is in Calgary necessarily. And obviously, if we're working together on a client basis, that's a little bit different. But I do get asked all the time about this kind of stuff, and would love to share what I know around that. We are going to talk about Canmore and Banff at the very end. I'm going to share the website and stuff. So we will share that and the cash flow sheets and everything around that. Interest in partnerships. Awesome. Okay. Go to the next slide, Andrea. We've talked about a few of these things in the last few months, but I want to mention them because, again, we're all struggling with rates. We're all struggling with making numbers work as investors. And I want to highlight, and we've put quite a few investors through this program now, is we have developed a program to do rent to own on a more hands-off sort of approach with a group called Rent Live Own. We did do a event with them. It's on our YouTube channel. And the thing that's always like concerned me about rent to own when I've looked at it is like, I'm not an expert in that. And so when I feel like, now is the time in the marketplace for rent to own, it's harder for people to qualify and it's harder for investors to cash flow. So if you put both of those problems together, a good solution for both people is rent to own, if you go about it with the right intention. The benefit for an investor is pretty substantial with the problems we're all dealing with today. Number one is you can look at different areas. This is not restricted to Calgary, by the way. Our program is wherever. But for the investor, you're looking at higher rent and lower expenses, which for most of us is like, music to the ears right now. Higher rent, lower expenses, and tenants that really care about this property because they have chosen it. They want to buy it. It is their home. And so that's a very different management experience and maintenance experience as an owner. So if you're interested in rent to own, the numbers can absolutely work well here. You have a predetermined exit strategy for, 2 to 4 years or whatever the actual term ends up being. And if, worst case scenario is you still have this asset if for some reason the rent to own does not work. So to me, that is something, if I wasn't really busy with wealth share and the trust and the REIT that's taking up all my time, I would be looking at developing infills and these like 4 and 8 plexes or looking at this program. So I think both of these are worth your time and energy. So if you have interest in that, let us know. I think, Andrea, maybe we could put the link in for our rent to own.
Yeah. Yep. I'll add it in there.
And then the second one is short-term and midterm rentals. You know, talking about options earlier, whether you have existing real estate, whether you're buying real estate with this in mind. There's one building we've been watching pretty closely coming up in downtown Calgary called the Nude Building. It is almost complete. There's probably already started move-ins that we have a couple units in there that we know the owners want to sell. But what's interesting about that building is it is actually zoned for short-term rentals. And the demand there, I don't think is going anywhere from the short-term rental side. I know there's obviously a lot of bad press around short-term rentals and concern from a policy standpoint. So even more so if you're looking at short-term rentals, having that zoning in place is key. The Canmore project we're going to show you here today, also the same thing. It is zoned for short-term rentals. You cannot live there long-term, even if you want to. It is a short-term rental only product. So that gives me comfort moving into that strategy that I've kind of done all I can. Obviously, downtown Calgary, we've got some exciting things happening with the BMO expansion, all the Stampede upgrades that we're getting down there in the event center and the arena. And, you know, Andrea talked a lot about the diversification we're seeing in our city. And it's really exciting because people here are coming to have an amazing opportunity in terms of our economy is providing in terms of job opportunities, but then people are excited to move here to combine that with their lifestyle of what the Rockies offer and what Calgary offers. And so it's really exciting to see people moving here and they're just so pumped about being able to participate in both of these things at the same time while living more affordably likely than wherever they're coming from. So I think it's a very exciting time for Calgary. To Andrea's point about the diversification, I realized about a couple of weeks ago that I haven't known the price of oil for some time. And that used to be like, you'd wake up, what's the price of oil? Like you would know every day what is going on with oil prices because we were so ingrained here in Alberta that like everything relied upon that. And now I've like very rarely is that what I'm worried about. Yes, it's there and it's a big driver of our economy, but there's so much other things happening now that is really, really exciting to see, to give Alberta more stability. We're always going to be reliant on the energy sector, but let's celebrate the diversity and diversification on the economy side that we're seeing come into our province that I'm really excited about. So that's really exciting. Student rentals as well. Canada has taken in a lot of international students, and those students need somewhere to house. So do our local students. And I think we're going to continue to see this year where this is an issue. I don't know if you had anything for rent at the fall of last year, but I had mums and dads calling me and like, please take a look at our kids, please. I have one mom who literally does walkthroughs with the boys and sends me photos and is like, she's on top of it because she doesn't want to lose this unit for her kids. And so if you have a house that has multiple bedrooms, or you could convert it to a student rental due to proximity, I think you could get significantly higher rents. You could do even 8-month terms on those and do like short-term rentals in the summer or something. So get creative with what you can do with what you already have. And if you're acquiring something new, again, still get creative. What is plan A and B? And am I okay with, either one of those, depending on where the world goes and how the economy changes? So student rentals is a big one. Massive, massive need here in Calgary, as well as many other Canadian cities. So keep an eye out on that one too. We'll go next. We just did a whole, or not we, Andrea did a whole event with the city of Calgary. So I'm not going to spend too long on this, but on our YouTube channel, there's a interview with Joshua Howes from the city of Calgary talking about secondary suites, what's coming with the city, what to expect. And we're kind of like sitting here waiting patiently. The city of Calgary is going to be announcing some type of incentive program for legalizing secondary suites in the city of Calgary. So we're anxiously awaiting that. If you didn't attend that event or haven't watched the recording, I highly suggest you do so if you are in the secondary suite world at all. And then the, blanket rezoning to RCG for Calgary, that's a big, big change. that if you're in the land development space or want to be in the land development space, you need to be paying attention to. I do think there's some pros and cons in this from an investment standpoint. If you're looking to buy, develop, like land to develop on, this is going to be fantastic for you because there's going to be a lot more options. We're not just all waiting for that one corner lot, that's got the perfect parking set up and can fit that suite of fourplex. Now we can relax parking requirements. We can develop in the middle of the street. And what that means to me is hopefully that land cost on the acquisition will go down a little bit. It's not going to be quite so competitive. And that will make your numbers work better at the end of the day. And but if you're selling one of those, corner lots that are 50 by 120, perfect for that, I would be selling it right now. I wouldn't wait till this is passed, because though it'll still be more desirable to have the corner, from a renting perspective, if I'm building something to rent, I'm not going to get more rent by paying more for that corner lot. I'm going to get the exact same rent if it's one house over, if it has the same amount of bedrooms and, bathrooms and size and all of that. So keep an eye on that as well, and talk about go view the interview with Joshua. He's been very supportive of our group and provided his contact details and everything. So it was really happy he came to our event. So, and the third one here, talking about, we already talked about this a little bit, but I think with new construction right now, you do need to be strategic. Not all things are great. Not all things are, created the same. And you do need to be careful what you're buying out there. So, like I said, if there's any products you want us to check out, please let us know. Builders out there will work with realtors. If we're not promoting it, we still can help you. And if we're not promoting it, we can kind of, give you our thoughts on it. But a few things that we're working on is we have, like I said, some clients looking to assign units who are planning to either list these units, hopefully if they can close, or some of them can't close. So we have one unit, we have a studio coming up in the nude that's going to list, and then we have a 2-bed, 2-bath assignment opportunity available that's like quick. They need a buyer like within the next 10 days kind of thing. So these were not our clients when they purchased the unit. We're trying to help them with the situation now, but you're going to see that type of stuff on the new construction side. I am interested in Stillwater and Edmonton still. Wellshare, the REIT that I mentioned earlier, we just actually acquired 16 units in Stillwater in West Edmonton. I do think Edmonton is worth looking at. It is extremely affordable. Their taxes are much higher, is the one thing I would point out. But from a price perspective and the kind of Alberta way and how many people feel sort of the rest of the province will follow what Calgary has seen, that could mean Edmonton is worth considering right now. Prices haven't popped off yet like they have here. Rents are good, but not as high. But Calgary is starting to get a little bit more unaffordable for some people, and those people are going to have to look elsewhere. That's just bottom line. They're going to go to Red Deer, they're going to go up the road, they're going to go to Edmonton. And so even though we're in Calgary, we do have opportunities in Edmonton as well. So if that's of interest, let us know. And then the third one here is the Banff Legacy Inn. This is a pre-construction opportunity that's in Harvey Heights, which is just right before the Banff gates. I'll maybe share my screen here. I think I have the website up. Okay, so I'll share this just so you get a sense of it. Can you see that? Good. Yeah. Okay. This is the Banff Legacy Inn. Here's the address here if you want to pull it up on Google Maps. Ourselves and one other group have exclusive kind of access to market this property until the end of this month. And so we got the initial pricing. At the end of this month, they're actually going to be doing a little bit of a price increase and be carrying into listing this publicly. So right now it's off market, but this is a stacked townhouse new construction project in Harvey Heights. What I like about this one from a risk perspective on new construction is they already have the permits in place. So they are ready to break ground. That's not always the case in new development. And this is a pretty exciting one for that reason. They can break ground in April. Stacked townhouse units, there's 1-bedroom unit, 2-bedroom units, and 4-bedroom units. And if you're not familiar, this is like Harvey Heights is basically right beside Canmore. 2 minutes from the Banff National Park gates. These do cash flow. We did alternative analysis. We did not just take the builder's projections on this one. We went to our short-term rental experts and had them analyze what they think these units will rent for at a conservative occupancy rate. And even at today's rates, we are still seeing cash flow. The one thing to be aware of on this one is right now we're at the point where we can take reservation forms and actually even select your units. The builders are asking for a $3,000 refundable deposit to do your reservation form, and then we'll be doing contracts up over the next couple weeks here. The big thing on this one is the deposit structure is a little bit hefty. They're asking for 15% at the end of the 10-day conditions. And the reason for that is not the developer putting that money in their pocket. It's the lender on the financing. That's what they are asking for. And that really speaks to the lending environment out there. You'll run into that in the multifamily space, the development space right now. And that's what they basically need to get this project off the ground. So we already have, reservations coming in, and I am really excited about this one. I think, there's not a lot more land being made between these two mountain ranges. You can't really go wrong here long-term, in my opinion. 1-bedrooms are just in the low 600s. Yeah. And maybe I could put the link, I'll show you what I can put a link to, but this is a Google Drive that I can put the link for in the chat here. Maybe Andrea can. And in here, you're going to see that information. Okay. You're going to see the price sheet. This is the realtor form that we have to fill out for you. Who these people are, who the developer is, who the actual construction team is. The floor plans here are in the, are in this folder here. So yeah, like I said, the 1-bedroom, there's 2 bedrooms, there's couple different variables there. And then the largest units are these 4 bedrooms, 3 full bathroom type of units. And the most important thing in here is the investment analysis. And what you'll find in here is 2 documents for each floor plan. One is our analysis that we did, and then the analysis that Infinity B&B did on rental projections, how much they think it'll cost you to furnish the unit, expenses. It's a very detailed report that we love that they put those together for us. No, 15% is at the end of your 10-day conditional period. So if you put in a reservation form today, we're going to select your units. They're going to be ready to do the purchase contracts up by the end of this month. So we were aiming that last week of February. Once we do your purchase contract, at the end of the 10-day condition period is when they are asking for the deposits. Now, they did say as long as they have the 15% by breaking ground in April, that's really what they need. So if someone needed to stagger it a bit between now and then, that's okay. But that has to be in hand by time they break ground. Hopefully that clears that up, Sagan. Yeah, so there's the Google Drive. Yeah, closing is 2 years from now. So spring 2026 is the projected. Now, again, there's no guarantees. Every investment has risk, right? So what I love is that they have the permits. So there's no foreseeable major issues. Permits are always my biggest concern with these projects when they're not in place, that they could take years. There's a lot of variables to figure out, but they do have them in hand. So yeah, 2-year anticipated closing. They're eager to get started. They're very eager to get started, which is great. Yeah, so feel free to look through this drive. Did I miss anything, Andrea, on that?
No, I think that covers most of it. I think one thing to note too that's unique about this opportunity, if you're not very familiar with Canmore, is the town itself is fairly restrictive in terms of where you can actually run short-term rentals, because they are wanting to protect residents who are living in the town as well. So this project, we did mention Natasha, but it is zoned for short-term rentals, which is quite unique and makes it special in that regard, because there are limited areas where short-term rentals are permitted.
Absolutely. And having the underground parkade is very unique on a townhouse project. It was not the original intention actually, but that was actually a requirement to get this approved, was the parking of underground parkade. So there'll be plenty of parking. The 1s and 2 bedrooms get 1 parking stall, and the 4 bedrooms get 2 parking stalls. And there's a total of 132 units in this project. When you see starting from 590, this is the price without GST, by the way, just as an FYI there. So yeah, if anyone has interest in that, certainly let us know. I think I will stop sharing there. And is there any questions I missed? No? When are the rental periods? What do you mean? Like, what's the maximum you can rent them? The max stay is 75 days. You can set whatever you want. So you're in control of who manages it, how you want to manage it. I just speaking generally about short-term rentals. If someone's staying for one night, they're usually the high risk partiers, but you get to set the rules for how you want this property run. And if you want it managed, then we'll connect with Sarah from Infinity B&B and she can take care of it for you. And then I think the developers also have their own team as well that they'll be putting a package together for. So
that's another nice thing though about this property, is that it's not a rental pool. It's not that all the units are going to be managed by the same manager and all going to look the same, because you can choose your own property management. You can make your units stand out in terms of a theme, you know, and that sort of thing as well.
Which is key on the short-term rental side. You got to create an experience. Why would someone pick your unit over someone else's, right? Or we have some people buying them for their like secondary home. You could just use it as a second home, vacation home, and use it that way as well. So you're not forced to rent it out like some of those condo pools. Okay, well, if that's all the questions for that, you can rent it how, there's no restrictions. It just can't be a long-term tenant. Any time of year you own it, you decide how and when you want it rented. You're always going to be busiest like dead of winter and summer. On the shoulder seasons of like spring and fall, it's a little slower for Canmore, but you do still get rentals year round. Yeah, no worries. Okay, well, if that the Home and Garden Show, we want to talk about that.
Oh yes, yeah, we got to talk about that.
Do we need to put the slides back for any reason, or are we good on that?
It's just our last one.
Oh yeah, so people can get the.
This is our contact info.
Yeah, contact info. Check out our YouTube. And then our Facebook group. I think many of you are in our Facebook group, but Calgary Real Estate Investing. Check us out there. We post all kinds of things in there and you can ask questions as well. And there's our website too, if you want to review our services and everything.